Good day. My name is Mtsi, and I'm joined again today by our Chief Investment Officer, Siboniso Nxumalo, as we're going to reflect on the first quarter of 2025 and really sharing how Old Mutual Investment Group is thinking about investments we manage for our clients in really some of the most uncertain of times. So I think let's actually start our discussion today with the domestic picture. While the formation of the GNU, the Government of National Unity last year, brought some initial optimism, and we thought, there'll be great stability, some reforms that we've been waiting for quite a while. Questions remain about the long-term cohesion and the ability of the GNU to tackle some of the deep-seated structural issues that we have in the country, like the energy crisis, infrastructure deficits. Sibo, perhaps could you take us through how the team is thinking about various scenarios that could happen, particularly after, our budget speech was delayed for the first time, and thinking about these different scenarios like the GNU carrying on as it is, or perhaps the DA pulling out of the GNU, or perhaps the EFF and MK party joining the GNU. Could you share a little bit more on that?
Yeah. Thank you, Mpho, and hello to the listeners. I think the way we are going to start talking about this was to first just take a step back and say what's happened to South African politics. And the South African politics are also reminiscent of what's happened to other emerging economies like India, where there was once a dominant party and that party then loses that dominance. What generally then happens is that dominance fades and then you get into coalition politics. So whether the current GNU exists or not, South Africa probably for the next few decades is going to be governed by some form of coalition. Is it this one? Is it another one? It doesn't really matter. But as a country, we're going to have to learn how to be governed in terms of some form of coalitive negotiation. Now, when we look at South Africa then, one of the way we look at it is to say, the ANC is probably in the center. We say the ANC is in the center. On the left is MK and the EFF, and on the right is the Democratic Alliance. And so therefore, the ANC being the once dominant party, then we can see that depending on which one it forms a coalition with, then the ideology of the nation will move in that particular direction. And actually, strangely, if you look at the numbers in terms of the recent polls, the left, the middle, the center, and the right are actually all about a third each. And so therefore, as a country, what we need to look at is how is these particular coalition governments forming. And the last comment on that, I think generally also, psychologists talking about the stages of formation in any group. And the GNU in this instance is a group. And those stages of formation, they talk about a group forms and then a group storms, which means you fight, you test each other. And then you norm, because now you understand each other a little bit more, and then you perform. And actually, from the GNU perspectives, we forget that, hey, the ANC does not know anything other than to be a government party that's dominant. The DA doesn't know anything other than to be the opposition. It's the same for the EFF and MK. All of these people, including the other small parties, have got to learn how do we work together. So whether it holds or doesn't hold, South Africa is in coalition politics, and depending on which one comes together, the ideology will swing that way.
And I think, looking now globally, we see again similar or even more expansive uncertainty. Yeah. President Trump, we've been watching very closely as there are these tariff wars and daily updates on that. And he has warned that no country is off the hook with regards to tariffs. Yeah. So this is causing a lot of noise now, but how much impact is this going to have on investments in the long term? And where should investors really be looking for opportunities?
Yeah, I think, Paul, you've asked your question very well because it's about the long term. So how do we think about how Trump sees the world? And from our side, how have we analyzed and then positioned clients' portfolios for that? What is Trump trying to achieve? If we look at it, Trump is obviously taking over in the US in a world where you've got big deficits. So the US, if you look at the tax revenue they collect versus the expenditure, actually there's a deficit of around 7%. That number needs to reduce towards 3% to be a little bit more sustainable. Now, to do that, it's either you're going to raise revenue. That's what all the tariffs are about. The idea of, can I raise revenue? Or what Elon Musk is doing, Doge, is to cut costs. So you've got to do either, and probably in combination, they're trying to do both of those things. Now, having lots of debt, so the US has got about 36 trillion in debt. Debt isn't itself a problem, but it's the fact that interest rates have gone up quite materially. So the US spends its budget, I think it's the biggest budget is social welfare, Medicaid, and all of those. Then it used to be the military, but now the debt, interest costs on US government debt is increasing. And so that now is going to crowd out spending. And so that's where the pressure is coming from. Just like as an individual or a company, if your cost of debts increases materially, you are going to have problems and have to make some decisions. Then the last point I'm going to make on this whole thing, on what Trump is trying to do in raising revenue and cutting costs, is that in 2025, they have to refinance 25% of that debt, so around 9 trillion. And so therefore, what they're aiming for, you want to refinance that debt at the lowest cost of debt possible. And then when you look at the US government debt, which from 2001 up until now, it's increased quite materially. If you look at the 10-year, as of us recording this, it says about 4.4%. It used to be below 1 in 2020, 2021. And so therefore, you do not want to refinance that much debt at this high level of cost. So as Trump is acting like a businessman, the country, the US, is a country that is spending more than collecting revenue, got to cut costs, got to raise revenue, lots of chaos. But this pressure, just like any company or any person who's got too much debt and the pressure of that debt, it can't be fixed immediately. And so therefore, from us then, in terms of thinking about positioning clients' portfolios, we're like, it's going to be noisy, whether the tariffs are on or off, because the issues that drive the tariffs are still in permanent existence. And so therefore, build robust portfolios, diversify well, and make sure that your portfolios are going to survive lots of noise, and the noise will be permanent.
Well put, Sibo. And then around April 7th, we saw the significant correction that hit the US market, right? And that was reportedly driven by the concerns over the new tariffs and trade tensions. How does this kind of a sharp pullback have an impact here locally? And specifically, how does it impact our investor sentiment, the Rand, the JSE?
Yeah. I mean, if we look at it and look at the first quarter, before we, in the next section, we'll talk about our performance. But if we look at the first quarter, the emerging markets, which is then China, Russia, Brazil, etc. South Africa is an emerging market that returned about 15% or so in US dollar terms. South African equities also outperformed. South African equities returned about 13% in the first quarter. Now, if you look at the US, the S&P 500, the 500 biggest companies, that declined by 4.6%. And the NASDAQ, which is a tech heavy, that declined by 10%. So you've got emerging markets plus 15%, South Africa plus 13%, the NASDAQ, the tech heavy NASDAQ with all those magnificent 7 tech companies is down 10%, S&P is down 4.6%. And so therefore, all of that noise materialized in the US. Why? Because actually the US, one, has these problems about high debt levels and the deficit that is too high that they've got to fix, but also starting valuations in the US were very high. We have said repeatedly, expectations in the US are very high, valuations are too high, and actually these companies have done too well for too long, and the dollar is also very strong. And so therefore we saw the biggest impact on the US itself, which again symbolizes what's really going on.
So you've actually already alluded to it. I'm curious to know, how have the OMIG funds performed in this environment, and where you and the team have made any material adjustments given the current environment.
Yeah. And so if we go back to the first quarter when we reported on our funds positioning, because positioning precedes performance, what we were speaking about at that time was that our funds had underperformed in the fourth quarter of 2024. Why? The dollar was very strong. America was very strong, especially the tech names, and South Africa was weak. Because once Trump got elected in November 2024, actually that went against our positioning. In the first quarter of this year, actually all of those reversed. The dollar was weak, South Africa was very strong, the US was very weak. And so therefore, that level of positioning then reversed, and we saw our funds starting to perform a lot stronger. So if we look at our balance fund and investors fund, those funds were second quarter in the first quarter of this year. And if you look at our balance fund is first quartile over a year, and I think second quartile over 5 years and 10 years. And so therefore, a small shift, but actually suddenly the fund's positioning changes. If we look at our global managed alpha fund in the middle of this, now this is an offshore fund that obviously invests offshore, and it underperformed its benchmark by 40 basis points. But that 40 basis points, for us, we look at it and we say, wow, actually that's resilient because the fund was not overweight the big tech names. And so its longer term performance is still intact, but in the shorter term, it has struggled because it has not owned all these magnificent 7 companies. And again, so if we look at our funds, generally we saw a lift in performance, which is pleasing for us to see. But again, we had positioned for the circumstances that we painted. So what did we do in the particular funds and what worked in the market? If we look at it, we, like I've said, what do you want? We look at the market today and we say there's a lot of noise. There's going to be a lot of noise. You want strong companies. You want quality companies, and you want companies that are diversified. So we have invested, if you look at our top 3 positions, it's going to be Anheuser-Busch InBev, it's going to be Bidcorp, and it's going to be Anheuser-Busch InBev, it's going to be Bidcorp, and then Tencent through Naspers. We think those are global companies that are large, and obviously in all of this crazy that's gone on, they've basically almost gone on sale. And so for us, the volatility, we like volatility because it offers us an opportunity to buy attractive assets. Basically, you're buying quality on sale. You're buying underappreciated quality at a good time. And so for us, we've leaned our clients' funds into those particular funds.
Hmm. And I mean, I guess just touching on, for instance, how you mentioned the balanced fund being top or second quartile over, last quarter, year, etc. And we've discussed the various risks, but really just zoning in a little bit more on opportunities that exist for clients.
Yeah.
We see that government bonds, South African government bonds, still offer attractive real yields.
Yes.
Our listed property showing signs of recovery, looking attractively priced. How best would one build a diversified strategy for these turbulent times?
Yes. So in terms of these turbulent times, the way we've looked at it is, one, you've got to pay attention to the valuation, the price you're paying for assets. So the first thing then we look at is saying the US is way too expensive. The expectations are too high. So we've gone underweight the US. South African assets, though, actually, we think there are pockets of value in South Africa, especially in the big rand hedges where you're buying global earnings and global profit streams at a discounted price. And so there we're seeing lots of value. But actually, also in all that is going on in the US with the fiscal and the monetary situation and the bad balance sheet, we have been buyers of gold. We've held gold for quite a long period of time because the trust in the dollar as a reserve currency, and also given where rates are, that concerns us. And so you've got to have a nice staple hold in commodities. But also in our offshore positioning, we have increased our cash position because we're saying, well, if it's going to be volatile, we need to have afforded ourselves the ability to act. And so therefore, our cash holdings offshore have increased. And like you've said, South African bonds are still some of the highest real yields globally. And so for us, again, we've got an overweight position there.
So looking further ahead, Sibo, into the rest of 2025, what are you and the team really keeping a close eye on? Is it the GNU stability? Is it global pressures? What else are you looking at?
The GNU stability, I think, is largely priced in, as in the market knows that actually all of these government parties have got to figure themselves out. They've got to learn how to work together. But actually, these lessons, we've seen them in the provinces. It's a struggle. It's hard. But actually, we are starting to get them storming or fighting about the right things. And this VAT one was so. By the time next year comes, it's unlikely the ANC is going to come with an ask for VAT or something like that, that then is not rebut. To us, we think this is great for the country because it means that policies are going to need to be debated more, thought out more. It actually takes the government closer to making the hard decisions of saying, where do we cut costs rather than just seek revenue? So that's a good thing from a South African perspective. And globally, and again, we're paying lots of attention to the US because the US has had US exceptionalism. It's outperformed in terms of the dollar and the market for the last 15 years. These cycles don't last forever. And to us, when we look at other global markets, emerging markets, Europe, and you look at Japan, the valuations there are far more compelling than the US. And so therefore we think actually the odds of getting good returns in those other regions are much higher. And we are hoping that Trump's volatility persists because it gives us attractive entry points into buying quality assets.
Thank you so much, Sibu. In fact, I'd like to just end off by really just repeating what you said around how, in order to really protect and grow our clients' investments, a mixture of focusing on the fundamentals, diversifying appropriately, and really just keeping our long-term perspective. That's how we're going to really navigate the uncertainty that we're experiencing currently.
Thank you, Mpho.
So I really do encourage you to visit our website and also to explore our WhatsApp vault if you'd like to see a little bit more around our thinking, our research, and our capabilities. But thank you very much for joining us once more.